Good morning. It's Wednesday. Have a seat.
Thank you.
It's Wednesday. I'm Wayne. Welcome to Wednesdays with Wayne, brought to you by the Real Estate Business School, where you get your license and learn to use it. This is the learn to use it part. So before we get started, the first thing I want to do as always is thank you for your time. And those of you that watch frequently know that the reason I do this is because a long time ago, a good friend of mine told me, and I'll never forget it, he said the most valuable thing anyone can give you is their time. So I just want to thank you for your time. Thank you for showing up. Thank you for being here today. And we're going to do our best to make sure your time is well spent. So thank you for being here. My name is Wayne Morgan. I'm co-owner of the Real Estate Business School. Again, we're a Texas Real Estate Commission approved education provider. We teach agents how to get a license and get started in the real estate business. But what we need you to know is that from my point of view is if you have a really crummy product or service that's really inferior and you're just trying to take advantage of people, what's the best thing you could have? If your product is not very good, but you're going to sell it anyway just because you're going for money, what's the best thing you could have? An uneducated customer, because they don't know the difference. But if you have a superior product and you're proud of it and it works and it adds value and the people that use it get what they want, which is more success, a better life, more money, all the material things, great relationships, harmony, peace, riches. If you have a product that provides all that, what's the best thing you could have? Educated customer, right? Right, because they know the difference between the two products. So this is about education. And what we want to do is the reason we do these is to tell you what we do, how we do it, why we do it the way we do it, and the benefit to you. Because at the end of the day, there's got to be a benefit to you. Because what do we know about marketing? The consumers, you included, me included, everyone, all of them. If you've ever watched me speak or heard me speak or been in one of my courses or seminars, you know that I very seldom use absolutes like all or every or never. I do my best to stay away from them. And the reason why is because as soon as you say everybody, the mind stops listening and it starts looking for the exception to that rule. Well, not everybody does that. I don't do it. Everybody loves milk. No, they don't. You love milk. I don't love milk. Actually, I do. That's just an example. I love milk. Everybody drinks alcohol. No, they don't. And so this is why I'm saying do my best to stay away from these absolutes. But I will say this: all consumers, I'm making an exception, have this question: why should I give you my money? Why should I do business with you? What's in it for me? The same three questions conceptually. They're all the same thing as why should I? What's in it for me? This is what consumers are asking. And what these events are designed to do is answer those questions. Why should you do business with us? Why should you give us your money? What's in it for you? Well, stay tuned, you'll find out. So that's why we do Wednesdays with Wayne. I'm here with my associate, Mickey Carroll. We work together. And she's got some questions from the last event that people have sent in. So the first thing I want to do is just thank you for your time and then talk about today's subject, which is how do you attach value to an asset? And I think it's important to know because I've seen it more often than I wish I'd seen it. I wish I'd never seen it, but I see it a lot. Excuse me. And the thing I've seen is I see people who pay too much and they borrow too much for real estate. And if you pay too much and borrow too much, there's nothing anyone can do for you. You might as well jump in the toaster because you're toast. So the question is, no matter what you're buying, if you're investing, how do you attach value to it? That's what we're going to talk about today. So give Vicki a hand. She can't hear you, but do it anyway. Thank you. And if you have any questions, send them in. Vicki's going to be monitoring her phone. She's on this event as well. We'd like to encourage you to engage and participate. If there's anything we can do for you, let us know. You can always reach me here at this info at buildmyrebusiness.com. Buildmyrealestatebusiness.com. So if you want to email us, info at, if you want to go to the site, there's the site. The company is Real Estate Business School because real estate is a business. Your home is a business, your church is a business, schools, real estate is a business. If you just want to sell a few houses and buy a new wardrobe and take a new vacation once a year, and those are your goals and you reach those, in my mind, you're successful. If you have your goals, you wrote them down and you reach them, success is yours. It's not up to us to determine what your definition of success is. It's an individual choice, right? Right. But if you're in this, if you've got a family to support, I'm going to tell you right now, it's a business. And if you don't treat it like a business and run it like a business, you're going to be out of business. And it's factually proven. 85% of the real estate agents that get in will not make it past their first year. Why? Because I've said it before, I'll say it again. Your license guarantees you nothing. You have to learn to use it. This is an HP 10B calculator. If you're going to do real estate investing, you need to have this tool and you need to know how to use it. So a pen is a tool, a pencil is a tool, a calculator is a tool. A real estate license is a tool. Unfortunately, most of these schools have not ever, they don't know how to build a business or invest, so they can't teach you how. They're great people, they're technologically intelligent, they built the courses Trek told them to build the way they told them to build them, but they don't have any actual experience listing, selling, or investing. And everybody knows experience is the best teacher. That's what we bring to the table. That's what we bring to the events. So, you want to start with some questions we have from last week? Or?
Yeah.
What are our viewers interested in?
Well, last week we discussed a little bit, we touched on assigning asset to a value, but it wasn't our topic, so we didn't...
Attaching value to the asset.
Attaching value to the asset, yes. Right. So they had more questions, more in depth, and they're like, when you say attach value to an asset, what do you mean?
Okay, great question. Let's use real estate as an example.
Okay.
Who sets the price?
The market.
The seller.
The seller.
Right? So if you look into, so there's two types, two asset classes. Broad overview, residential and commercial. And residential, most of those properties are in the multiple listing service. So this is why I encourage people to get a real estate license. I know it sounds self-serving, but most of my best deals I found in MLS. That's one reason, because when you get licensed, you join your local board, you join the multiple listing service, you pay dues to the board, also to Texas Realtors, and also the National Association of Realtors. So there's this flow of money that goes upstream, and it flows down back toward you in a way of education and access to information, facts, figures, statistics, data that helps you be more informed as a real estate professional. So join the club. If you don't have a license, you don't get to join the club. You're outside. The profit is made inside. The problem is, if you do this in the stock market, you go to jail. And as I've been telling people for years in my Principles of Investing class, it's a 4-day, 30-hour Texas Real Estate Commission approved investing class. And people inevitably, there's always some character in there that wants to cut the corners off. Like, don't cut corners. I'm not, you know, the last thing you want to be doing is dancing for your cellmate. What are you in for? Murder. What are you in for? Tax evasion? Oh, you're in trouble, boy. Dance. So, I'm not suggesting you break the law or even bend it. What I'm suggesting is the better information that we have combined with experience, the better our decisions are going to be. And I don't know about you, but I just want to make a better decision today than I did yesterday. And the way I do that was I read a lot of material. I'm a very avid reader. I do a lot of market research. I'm very curious. We talked a couple weeks ago about the two C words, right? The two C words that are the death knell. And you'll go, the C word? I'll go, yeah, it's kind of like the F word. You should teach your kids the F word and the C word. The C word and the F word. Cash flow. Most families don't understand those two words. They try to stay away from four-letter words. Well, the worst four-letter word in the English language is wait. So don't wait, okay? Go create cash flow. It's not about cash, it's cash flow. So the reason I like getting a license, and I suggest you do it, you get into MLS, you have access to properties the public doesn't have. Okay? So just remember, you're never going to get rich 3% of the time, and you're never going to have Martha Stewart's problem. Just get your license, get access to the properties. It also tells you value. So when you talk about values, the seller is going to put their property on the market. They're going to list it with the listing agent. He specializes in marketing properties. Typically, the listing agent will go out to do a market analysis. They'll look at 3 different types of properties. Those that are active, those that are sold, and those that have expired or not sold. Now, how a property expires in today's market, I don't know. We have more buyers than we've ever had. We have fewer homes than we've ever had, and people can't find houses to live in.
Right.
Yet there's still some expired listings out there. I don't know how. Well, I do know how, because they're overpriced and undermarketed. That's how. They're overpriced and they're undermarketed. So typically, if you have a professional realtor and they know how to do a CMA and their communication skills are intact, they can typically have a conversation about value with the seller. Sellers are typically overly optimistic. They read all this news. They see the flyers and the ads on the properties around them, and they think because it's listed for that, it's worth that. And so there's I think Alan Greenspan used to call it irrational exuberance when referring to the overheated stock market. And so they get excited, they think it's a pot of gold, and they want to price it. And typically in today's market, the prices are going up day by day. If you look at the Austin Board of Realtors December report, December of 2021 had a 30% increase in value over December of 2020. So in 1 year, compared month to month, property values went up 30%.
Yeah.
Well, it's a big jump, it's a great return. And that's why we recommend being in it. You get this built in. You're not doing anything except making your mortgage payments and hopefully maintaining that property. And then it just increases on its own, just by sheer appreciation over the years, the value goes up. So if you're going to live in a home, personally, I'm not that concerned about the price, because where I live matters to me, right? It's like your haven. You raise your kids there, you and your spouse, create your lives there. You design your lives there. You live your lives there. You have friends over. You share their lives, their stories. You have dinner parties. You have cocktail parties. You have Super Bowl parties. And it's a place where you have this sanctum where you can go and have some peace and quiet and get out of the craziness of the world and have your family, have your friends. And
form memories.
Exactly. And, some guys are really handy. I'm fairly handy, I tell my wife, I can fix anything from a broken heart to a Mack truck. Then I was taught from an early age how to fix stuff. I can remember when I was about 10 years old, my father teaching me how to take the washers out of a faucet in the sink and my sister's bathroom and how to replace them with new ones. And so I know how to do that. And so if something breaks around my house, I'll go fix it. It's kind of fun. I get out there, my wife and I, we plant in the spring, and we like digging in the dirt and planting things. We like building things. And we build a business, we develop property, we add value. We just love real estate, and we love fixing and building things. So where I live is important to me. I do have this theory that you never pay retail. Only losers pay retail. So I want to do like everybody else. But I will admit that if it's where I want to live, I will pay a premium to have the kind of home that I want to live in. And so when it comes to values in today's market, realistically, if that's the house and you want it, you're probably writing a check. Because this is a heated market. If you don't want to write that check, the person standing behind you will. So it's an aberrated market. It's been running for a while. It's probably going to run for a while longer. So when it comes to the place where you live, you're going to be paying a premium for it in today's market. No question. When it comes to investing, that's a whole different story.
Yeah.
You know, you're taking capital, a little bit of your own, you're getting a bunch from someone else, a lender, you're putting those together, and you're going to acquire an investment. And to me, there's two schools of thought. One is your profit is made when you buy. So you've got to buy it below market in order to repair it and get it to market. And then hopefully the market value will increase. And then you'll do things to increase the value of the property. And so part of it is knowing how to attach value to that asset. What is that property really worth? Right. Okay. And that's why I designed the course. That's why I wrote it. And that's why we got it approved by the Texas Real Estate Commission. And this course is coming up, right?
Mm-hmm. February 22nd.
February 22nd. So this is a preview of the course we're having February 22nd. So those of you that, it really doesn't matter to me if you're licensed or not. If you want to take the course, take the course. But what we're going to talk about is in details of 4 hours, right? Mm-hmm. 4-hour class. It's for CE credit. It's Texas Real Estate Commission or TREC approved. And we'll go into this in great details. This is like a preview to that course of all the different ways that you can attach value to an asset. Discover the value. What is that property really worth?
And does it vary? I know the seller sets the price, but a buyer has different value settings, a perspective on value. So like you said, you want a specific neighborhood, you want a specific house, and so that has more value to you and you're willing to pay more price, more expensive amount for that. But if you are literally just making your choice on money, not necessarily location, your value standards change? Is it different, or is there just a standard set value to an asset?
Oh, good question. There's a lot of ways to determine the value, okay? So when you go into any kind of real estate transaction, the principle is sellers want to sell for the most amount of money, make the fewest amount of concessions, and not disclose anything about the property. Buyers are 180 degrees diametrically opposed. They want to pay the least, get the most amount of concessions from the seller, and they will know everything about it they can. So these two parties are opposed. That's why there was a law passed years ago by TREC that you can't have dual agency. One realtor cannot represent both parties. In the good old days, you could.
Then you get both commissions.
Well, if they're that opposed, how can one person represent both parties fairly?
Right.
It's hard.
Yeah.
So we have agents who represent buyers and agents who represent sellers. The agents represent sellers. I say the sellers set the price. Sometimes a good real estate agent will talk them off the ledge. If the home is worth $500,000 and they want $600,000, a real professional will say, no, it's not $600,000. It's $500,000. We can try $525,000. We'll do $550,000. If the market's going up, like it is, and they're adamant, they go, no, $550,000. I know I hear you. You're saying $500,000, but I want to try it at $550,000. Then I would take that listing, but it's got to be a 6-month agreement. So I'll do a 6-month listing presentation, and hopefully in the end of 6 months, that property is appreciated to the point where you can get $550,000 for it.
So they have
I'll
to be
do
willing
it,
to wait.
but it can't be a 30-day listing. It's got to be at least 180 days.
Yeah.
And then the other thing I do was I put in automatic price reduction. Part of my listing agreement, it's a form that I created, where the property is automatically deducted in value, 5% of its value every month. I don't want to go back in there every month and redo my presentation all over again.
Right.
Okay, so this thing called pricing is handled at the listing presentation. The listing is sold the night it's taken. And when it's taken at or just above market value. If the market is screaming up, then realistically, it makes sense that you be safe to price it a little bit over market. If you have enough time, the market will catch it.
Okay.
If the market's going down, then every day it sits there, it loses money.
Right.
Today, every day it sits there, it makes money, right? It increases in value.
Yeah.
And so people say, well, I'm not going to buy, the market's overheated. Yeah, but they're increasing in value every day. Well, I'm going to wait. For what? So the market to correct. Okay, when's that going to be? Because I really like to know. Oh, I don't know, but someday it will. That's true, someday it will. This is what we know about the economy. Can I change this? Okay. Here's what we know about the economy. It's going to go up, it's going to come down, it's going to go up, it's going to come down, it's going to go up, it's going to come down. It's going to do that throughout your life. When and the degree to the amount of correction is anyone's guess. No one knows. If they say they know, they're lying to you. This is what I know. So what people want to do is our market, where's our market? Is it here? Is it here? Where's the market going? How long will this continue? I have no idea. Will it correct ultimately? Yes, because it's simple economics. It's supply, demand, price. Economics 101. And when you've got this unrelenting, incessant demand that's through the roof, and you have this, it's here, right? Demand is insane. And we have this low supply. What, we've got a 2-week supply of inventory. If you go to Lakeway, where I live, you go into MLS and you put in one criteria, Lakeway. So just open up MLS and you'll see there's about 2,500 homes in there in all the 18 counties it serves. If you put in Lakeway, guess how many homes are active right now in Lakeway?
10.
Yeah.
9.
Yeah.
I'm sure one sold between now and last week.
Well, 2 days ago it was 10. Yesterday it was 11. This morning it was 6.
Wow.
6 houses. So what happens is price is going to follow demand. And what mitigates risk in this market is this unrelenting, incessant demand. The demand is so high, the supply is so low that the prices are going to go up. It's just economics. You want to drive with the price of sugar, cut off the supply. You want to drive with the price of oil, cut off the supply. That's why oil prices were so low last year, 2 years ago. Because we were producing our own oil, we had an abundance of it, and prices came down. Now we don't have as much oil available, we're having to buy it from people around the world, and prices go up. This is simple. It's economics 101. So when I'm buying for myself, I'll pay a premium. What Lynn and I have been doing in the past several years is we like buying these luxury fixer-uppers. It's amazing how people have a whole lot of money, still don't take care of their homes. I mean, this is our 3rd distressed property in a row. And we love living in these big houses. We just love them. People, there's only 2 of you in 7,000 feet. I go, yeah, so? let me know when you get to the problem.
More to decorate. More creative.
Well, there's only 2 of you, I know. It's easy to hide. There's two theories operating, and don't forget them, okay? Familiarity breeds contempt. You want your wife to be contemptible of you, hang around her a lot. And the other one is absence makes the heart grow fonder, right? I want to make sure her heart is growing fonder, so I disappear. So when we buy those, we buy them wholesale.
Yeah.
I mean, the last house we bought, we negotiate hard. When we're investing, again, it looks like a win-lose game. The sellers want to sell for the most, make the fewest amount of concessions, and not tell you anything about the property. There's a seller's disclosure, they have to fill it out, they have to sign it, blah, blah, blah. I know. But I've been through this, so I get there are exceptions, and some people are really honest, but a lot of them won't tell you much. And it's amazing what we've discovered.
Wow.
That should have been on that form. So let's not be Pollyannish about it, okay?
So
they want to make the most, we want to pay the least.
Yeah. So there's lots of ways to apply value to an asset.
Well, yeah.
Yeah.
Over 20. But so there's two asset classes, right? There's residential and commercial. So in residential, this is the great thing about MLS. What's in MLS? What the property sold for. What's the definition of fair market value? What a property sells for. What a willing buyer will pay. What a willing seller will sell for, neither being under duress. Well, there's your key right there. Find someone in duress. That's why it's called distressed real estate. So what I'm looking for when I buy is an area where I can get in low and appreciation. I want to be one of the cheapest houses on the block. Something I can buy below market.
Yeah.
Problem property, problem seller. They're out there. A lot of them are in MLS. They try to sell it themselves. They don't know how, they can't, whatever. So they hire a professional, like one of y'all. And they put it on the market. And I come along. And I know what I'm doing. So if you have sold properties, then all you have to do is do your, what's called a comparative or competitive market analysis. You compare the subject property to other properties in the area. And this gives you a sense of value. This will give you the exact number, but you can arrange, you kind of get a feel for, if you're a real estate agent, you should be looking at properties 2 hours a day. You should be previewing 2 hours a day, every day. You've got to know your inventory. This is why we recommend people become listing agents. Never put a buyer in your car. I'm telling you right now, if you want to be successful in this business, no. You've got to be good stewards of your resources. And your resources are time, money, and energy. And you've got to deploy those with some degree of responsibility. Right? You can't just be hanging out all day and sitting on the couch and waiting for the phone. You got to be aggressive. You got to be assertive. You got to have a business plan. You got to execute it. So you've got to do. To me, if you do 3 listing presentations a week in 6 months, you're in chips. You're in the chips. You're knee deep in cash. Properties are closing like crazy. If you're working buyers, you have time, energy, money. So look at how much time you spend working buyers and how much you make. And just calculate how much time you spent with sellers and how much you make. How many buyers can you work at once?
One.
Yeah. How many sellers can you have at once? Can you have 10? Can you have 10 listings at once?
Oh, yes.
20, 30, 40, 50? Right. It depends on your organization, your systems, and your structure. So why would you work one-on-one when you can work at 50 to 1? Why would you have one client at a time when you could have 50 at a time? See, it makes no sense. So all you have to do is go on 3 listing presentations a week. So when you go on these listing presentations, you get them. And what you have is, you're going to have 3 homes that are active, 3 that have expired, and 3 that have sold. And you compare these to the subject property. Ergo, comparative market analysis. Well, to get to 3 that are active, you probably got to look at 10. To get to 3 that are expired, you have to look at 10. To get to 3 that are sold, you probably got to look at 10. So to do one market analysis, you looked at 30 properties. You do 3 a week, you looked at 90 properties. You look at 90 properties a week, you're going to find some deals in there. You're just going to see them. Plus, if you do these listing presentations over and over and over, you become very familiar with property values. So my definition of a market analysis, it's a justification of a gut feel. It's a justification of a gut feel. Because if you do this, if I took you into any tract home subdivision in any city in the world, and we looked at 12 homes, when you looked at number 13, would you have a feeling for whether it was at, below, or above market? Yes, because you've had the experience of comparing size, amenity, construction, location. And out of that comes value. What a willing buyer would pay, what a willing seller would sell for. Neither being under duress, but I like duress. Okay? So there's 2 ways that's one way to attach value is you do this market analysis. and you compare what's on the market now, the competition, these were probably overpriced and under-marketed, and these were priced and marketed, and a professional realtor came in, they talked to the sellers, they coached them through it, the sellers agreed, they got it tricked out, they did everything they were supposed to do, and sold. There's a reason why these have it, these didn't, and these did. It's all, and there's a combination of things that need to go into getting these homes sold for top dollar. So one way, the easiest way, and one of the best ways, is CMA. That's why, when you get licensed, you have access to all this data. Yeah. And the most important part is those sold comps, because that's telling you what the market's doing right now. I was doing a market analysis yesterday, raising money for a development we're doing. So I got a question from one of my prospective equity contributors. He goes, well, how many homes for over $2 million have sold in Lakeway in the past 6 months? And I went, that's a dang good question. So if you go to Lake South, right? So the MLS is divided into geographic areas. And there's the South Shore of Lake Travis, which is where I live. And there's this area called Lake South, LS, which goes everything from Dripping Springs out to Spicewood and this Lakeway community where my wife and I live right now, where we live right now. So anyway, I put in LS, right? There's this great community down the road called Spanish Oaks. Spanish Oaks is over $1,000 a foot.
Wow.
2 years ago, that house was $3 million. These homes I'm looking at in MLS, 2 years ago, they're $3 million. And $3 million, I'm like, really? I don't get it. Now they're 6.
Wow.
I know. So when you start looking at value, understand, if you're in an escalating market and it's a personal residence, you're writing a check. and the way the market's going in Austin, a lot of the locals can't afford the homes now because we have people, we've become a people magnet.
Yes.
The old song by Joni Mitchell, I think it was, it's paradise, so you call it paradise?
Mm-hmm.
This is paradise. Unfortunately, a lot of people call it paradise. Now it's on. I mean, people are discovering that this is a beautiful place to live. They have great people, have great geography. There's a lot of great things about this part of Central Texas.
Yes.
And so what happens is they come from other parts of the country where home prices are a lot higher. And so they cash out there, they come here where the same home is almost 50% less than what they were living in. They get twice the value. It's half the price.
Right.
And so they pay cash, they don't even blink. They're happy. Locals are being priced out of the market. Yeah. So this goes back to what I was saying, just if you have any problems about that, just make more money.
Get into real estate.
The answer to most problems is the answer to every financial problem is make more money. So does that help?
It does, yeah. Yeah, that's,
It's
so there are other...
Yeah, it's the best way right there.
That's the best way.
Yeah, if it's residential.
Mm-hmm.
Yeah.
How would you do it for commercial?
Well, let's say this is distressed. Can we stay on this for a second?
Mm-hmm.
Okay, so if it's a primary residence, you look at this, you go, okay, they want $1 million, it's worth $1 million, dang, guess I'm paying $1 million, or $300,000, or $2 million, whatever your price point is. So let's say you want to go for distressed property. There's 3 things I look for in MLS for distressed property. One is, the most important, is days on the market. Everybody knows the longer it sits, the less it's worth. Right. Same house, but there's this perception there's something wrong with it. And there is. It might just be the sellers, just adamant and out of touch and obnoxious and refuse to accept reality. Your home is not what we're asking for it. And your realtor showed you that 88 times. So that's number 1 is days on the market. And then, so if you go into MLS, I'll give you a tip, okay? If you're looking for deals, just go into MLS and you've got all these categories at the top, right? That you can search by. Just click on dollars per square foot. And the lowest one, $1 per square foot, comes up first, right? There's your deal. And the deal of the decade comes along once a week. Because they're in there. Okay? So first I look at days on market. How long has this thing been sitting there? Because after a while, you know, it's like the first day it's listed, they're like, yay, we're on the market. And they've already spent the money, right? I'm like, you gotta wait till it closes, honey. Or sir, whatever it is. They get so happy, you know, they're all, it's like a first date, you know. Then reality sets in. A month goes by, nothing happens. Another month goes by, less happens. Another month goes by, and something else happens. And the other thing the something else that happens is they start getting, how I say, disappointed. You know, their mood changes. They go from irrational exuberance to despondent. This is time to strike. Fins up. And so I look at days on market because I know the longer it sits there, typically, the more negotiable they become. After a while, they're like, just get rid of it. Just make it go away. And so this is if I could just say to you realtors out there, you got to get that thing priced right up front. You don't put your sellers through this. Don't do that. I don't care what it takes. You argue with them, you fight with them. Whatever you got to do to bring them to reality, grab them and shake them by the collar. But this is what happens when you overprice property. And the thing is, in today's market, it actually happens. You can overprice them like into oblivion. They still sell. So
yeah.
It's just really strange. But that's what I look for, number one. I'm speaking in overall terms. You got to understand, and I understand, we're in an aberrated, overheated market, so I'm not oblivious to that. So this number is shorter and smaller than it used to be, but this deal that I'm in now was on the market it was over 6 months. It's,
oh wow!
Yeah, almost 6 months, 170 days. That thing was on the market, sitting there.
For that six and a
Yeah,
half
6
acres.
acres. Yeah. So anyway, that's number one. And then I read the remarks. Your remarks will tell you. The agent's remarks. You know, if it's been newly remodeled, I'll pass, because that's what I want to do. So what I want to do is buy these things and I want to add value to them. And there's 2 ways to add value. You can buy it below market and then add value to it. Okay? So there's days on market and then there's remarks. The second thing I'm looking at is the agent's remarks. What do they say about the property? If it's help, disaster, bring all offers, hurry, won't last, desperate.
Vintage designs.
Right. Handyman special, bring brush, reap thousands. I'm like, okay, I got it. Right. Bring all offers. And then, again, you don't see those much today, but I'm talking about what I've done over the years to, ferret out the good deals from the mediocre deals. So it's usually days on market and then remarks. And then you can do a quick study you're in MLS, you're looking at these, just do a quick CMA. Just go back to your criteria and just take out, click off of active and click closed and see what's closed. So you have yourself your property, bedrooms, baths, stories, square footage. Simple. Just go to saying, unclick, active, click closed, look for similar properties, same size, bedrooms, baths, square footage, and it's going to tell you what they're sold for. So now you know what the retail value of that thing is. So now we're down to what can you acquire it for? What would it cost to get it fixed up?
Right.
Okay. So there's a simple formula for that. You want the formula?
Yes.
Okay. So once you get this, the fair market value, or what I call the retail price, but if it needs work, right, this is what you want. See, to me, it's this transition where you make money with your mind, not your labor. So we're taught, go to school, get a good job, work hard, exchange labor for money. That's the industrial age. Now we're in the digital age. In the digital age or the information age, you make money with your mind. And so you look at this property and you go, what can I do to increase the value of it that someone will be happy to pay for? So some people don't have the vision to see what these homes will look like. They see them how they are, not how they can be.
Right.
This is why it took me, I was in real estate 6 months. I kicked this buyer out of the car and I said, lose my number, don't darken my door, don't call me, don't refer me, never call me again. This is because this buyer was so ungrateful about this opportunity that she was provided and turned up her nose at it. So we're selling non-qualifying assumptions in the late 80s. Back then, the FHA had this loan where if you took out a mortgage with FHA and you decided to sell it, I could assume your mortgage. I could take it over. No qualifying. No lender, no survey, no appraisal, nothing.
Yeah.
We go to closing, you sign documents, I sign documents, it's my house. I take over your loan. Well, there was a lot of scam and there was a lot of illegal activity when the market melted down in the late 80s. So FHA doesn't do those loans anymore. But at the time, they had a bunch of them. So what we would do is we'd sell these houses. And because a lot of people in the late 80s in Texas, if you were in Texas and you were in oil and gas, real estate, or the stock market, all three of those markets got smashed, hammered, crushed, And so it doesn't mean you're a bad person, it just means you're temporarily illiquid. And so a lot of good people with limited cash and credit. So these non-qualifying assumptions make great buys because you can buy it with no money down and no credit.
Right.
So we were selling the fool out of them. And so I took this buyer into one, we'd list 2 or 3 a night, and then we'd sell them all on the weekends. You had this buyer, she walks in, she looks at it, she goes, I don't like the color of the wallpaper. I said, well, you can paint the wall. No, I don't want to paint the wall. I want 4 bedrooms so I don't have to redo. So, okay, well, how much did you want to put down? Oh, I want to 0 down. Okay, so how much of your savings do you want to invest in your home? I don't have any savings. I said, do you have no money? No. I said, okay, this is 0 down, I understand. I want to keep looking. I don't like the wallpaper. So you can paint the wall. Or would you like to paint the wall? What color would you like to paint the wall? I'll paint the wall for you. You want the wall paint? I'll paint the wall. What color would you like the wall? I just want to keep looking.
They were just shopping. They weren't even.
It's this whole attitude, right? This entitlement, this, you got no cash, no credit. You turn up her nose about the wallpaper. I came out of my scan. I said, tell you what, let's go. She thinks I'm going to show her some more houses. I showed her the door. Like, no, honey. I took her back and dropped her off where I picked her up. She goes, I'm going to look at houses. I said, you might, not with me. I'm done. You're ungrateful. And I can't really, sorry, but I can't tolerate it. So don't lose my number, okay? Don't refer me.
Yeah.
I went home and they goes, how'd it go? I said, for me, great. I fired that buyer and never put one in my car again. Unless they had cash and an address. So I focused on becoming a listing agent, and that led me to my investing career. So you find out the fair market value. If it needs work, this is going to be called the after repair value, or ARV. So let's call that 100% of the value of this property. Well, you've got to take money off of this to figure out where you're going to be. So you take off 30%. So let's say it's, I don't know, $100,000 property, which are on any yet, but just for simple calculations, you take off 30%, you're at $70,000, right? Then you take your repairs, whatever it's going to take to fix it, and you subtract that. Let's say that's $20,000. Then there's your offer price. You're offering $50,000. They want to sell for that. So before you start whimping, whinging, and whining about my numbers, this is the formula. Violate it at your own risk. Look, and they say, we don't have to sell. I said, I understand. I don't have to buy. Now what do you want to do? you got to write 10, 20, 30, 40, 50 offers.
Mm-hmm.
You're in the offer writing business now. So you write them. And this is how we make our money. When you're this is one way to do it. If you're making money on distressed property, this is your formula. Take off 30%. And then you have to make sure that you don't over-improve it. You see, when you look, if you've done stock, you'll see this. So in the stock market, they got these things called range riders. They run in this range. So you take any stock, okay, Dell, Microsoft, whatever they are. You take the stock. And the stock will go up, and suddenly it'll kind of stop and start to fade. This is called resistance. They'll come down here, and it'll kind of bottom out, and it'll mess around here, and then it'll kind of do this, and it goes back up. This is called support. So you have support, resistance, support, resistance, support, resistance. You go through any neighborhood, any tract home community, you'll see the same trend line. You'll see the support and the resistance. So to me, the resistance is also retail value. So anything you can buy below that, that's your profit. So when I say your profit's made when you buy, it's made when you buy and don't over repair. So you can't go in there and treat a $300,000 or $400,000 tract home like you would a $2 million luxury home. They're two totally different houses, totally different demographic, totally different market, totally different upgrades. And the biggest thing you can do, and this is a lot of the luxury homes, some of the ones that we bought, you could see where the person that was doing the rehab started running out of money, okay? Because it started going cheap on the cabinets, it started going cheap on the hardware, started going cheap on the lights, and you could see it in the house. And people in that price range, they've owned several homes and they know what they're looking for. So part of it is, when I say profits made when you buy, this is what I'm talking about. But it doesn't always have to be distressed property, right? So this property that we're doing now, they were at 2.2, we bought it for 1.9, it's 6 acres. And the way we're adding value is we're putting new construction on it. We're building 16 luxury homes. So you can take a home that's existing stock, and you can find distressed property, and you can figure out how to figure out what it's worth. And under that you can get, you got to figure out what's going to take to get it in saleable condition. And then that's how much money you're going to have in the deal. Yeah. Your acquisition cost plus your repair cost. Now, whatever you get below that is what you put in your pocket. So you got to have your costs going in, sales, there's going to be closing costs, sales costs, mortgage costs, appraisal. It's going to be stuff going in, and it's going to be costs coming out. So you got to have the cost coming in, costs going out, the actual improvements, and then your acquisition costs. Add all that up, you get a number, and the profit, the amount you buy below that is what you keep. That's how you do it. Any questions?
There was one question, but I think you've covered it. The saying, your profit is made when you buy, and do you agree? And
in some cases, it's made when you buy. Sometimes it's made when you improve.
Right.
And so I know I'm looking at another piece of property that I'm probably going to play pretty close to the asking price because I think it's there. And it's based purely on things that are going on around it that are going to bring it up in time. It's just raw land. So there's a couple of ways to do it. One is buying below market and improve them, and one is just buy land and then improve it by putting improvements on it. So there's more than one way to do most anything.
Right.
So it's not always when you buy, it's when you improve. And how will you improve it? How do you add value to it so that you can make your lenders happy, and then have a market that's willing to pay to go live there or either own it or rent it from you.
Let's see, we had another question. Do you negotiate everything?
Do I negotiate everything? Yes. Almost. Lettuce is lettuce. Yeah, how do you walk up with your shopping cart and go, I'll tell you what, I priced all this in aisle 4. That gets about $250. I'll give you $175 cash. That clerk is going to go, someone call 911, please. That guy, Morgan, he's back. He's negotiating the lettuce. So, not everything about real estate and everything that goes with it. Pretty much, yeah. We leased a piece of property the other day, and I wanted it, and I thought the rent was decent. Actually, it was less than I thought to be. I asked how much the rent was on it. The guy told me, and I actually thought it was a little low. It was less than I was expecting. So, I'll take it. It didn't take long. I saw it. I walked inside it. I had him on the phone. I asked him how much. He told me. We did the deal on the phone. It took like 2 minutes to lease this commercial space.
Wow.
So if I see the values there, no, I'm good. I just want, it's not always about the money, it's the value for what I'm spending. I mean, I think most consumers are like that, right? I mean, I don't care what it costs, I care what it makes.
Yeah.
But I know it's $5, $500, $5,000, $50,000, $500,000. It's not how much, it's what am I getting for what I'm spending.
Yeah.
And if I can spend $50 and get $70 worth of value, then I'm happy spending $50. But if it's $100,000 of value, they're trying to sell it for $70. No. You know what I mean?
Yeah.
So that's what I look at. What's the value? I just want to get, I'm like you, everybody else. I just want to get what I paid for. And I love a bargain. I mean, I like bargains.
Mm-hmm.
I don't like paying retail. I mean, I just don't. There's a saying in real estate, and we'll do this in class. It's called opportunity cost. If you don't understand opportunity cost, you're cruising for a reason, because you're going to get your hat handed to you. Hear me now, believe me later. You've got to understand opportunity cost. Good. You have to. It's the difference between investment A and investment B. If you choose the wrong one, the one you lost on or didn't make as much on, that's what it cost you. That was your opportunity cost. So you've got to have a financial education. As we said before,
right.
There's 3 types of education: technical, business, and financial. You've got to have a financial education to do this. You've got to know how to run an HP 10B2 calculator. You've got to know your numbers. Does that help?
Oh yeah.
So when I say, it's not always your profits made when you buy, it's when you buy and improve. And you've got to know your numbers to do that. You've got to be able to take historical data and look into the future. You have to. If you can do that, and you're confident in your ability to do that, you've done enough transactions to do that, then go do that. That's how you get paid. You're no longer exchanging labor for money. You're exchanging ideas for money. And so you leverage yourself to the hilt. I don't mean just with money. I mean, it's time, energy, experience, people, money. There's a lot of ways to use leverage. And when you start developing property, you're using your leverage on like 8 different levels, because you're doing almost everything with nothing.
Yeah.
You know what I mean?
Mm-hmm.
Like nothing. I don't know the engineering. I don't know how to engineer a 6-acre site for 16 homes. You gotta hire an engineer.
Yeah.
I don't know how to design those homes, how to build a house in 3D. I don't know how to do that. So you gotta find someone who does. You gotta pay them. So you gotta understand how to do more with less, to the point you do everything with nothing. And you pay for experience. Highly skilled, highly trained professionals. And one thing I don't go cheap on is assistance, help, labor. Professional help.
Right.
Like even in the company, we used to hire based on who could hire the cheapest. Now it's no. It's what does the market want? Here's the job description. Here are the tasks we need to get performed. What does that cost? It costs this. Okay, good. Go get that. So we don't beat up the employees, as you probably experienced. and got to try to get the most amount of labor out for the cheapest amount of money. I think that's crazy, personally. So we want to make sure everybody in the company has a great salary and opportunity to earn more money. So same with all our trades, you just pay them and be grateful and thankful that they're working with you. Yeah. So it's making money with your mind and other people's, using their experience. Does that help?
It does.
Okay.
Yeah. We have one last question. The stock market had a sell-off these past few days. Do you invest in stocks? And if so, how do you attach value to them?
Okay, I did invest in stocks at one time. I don't. I'll tell you why. I took this off. One of the publications I read a lot is the Wall Street Journal. So here's what the Wall Street Journal said this morning. The S&P U.S. stock indexes ended lower after a second tumultuous day as investors prepare for the Fed's plan. So you have this market, right? They go up. What drives any market up? Real estate, stock, anything. What drives it up? That's it. Pure unadulterated greed. What drives it down? Fear. It takes a very creative person to know how to spell a word more than one way. Or doubt. And so right now, both of these exist. It's not affecting real estate values.
Right.
It's having a negative effect on stock values. The S&P 500 dropped 1.2%, the NASDAQ 2.3%, and the Dow Industrial 0.2%. As on Monday, major indexes spent the afternoon paring back losses, leaving some traders bewildered about the midday reversal. Investors are anxious about Fed interest rate increases and stimulus pullbacks. Stimulus pullbacks. Fed spending $80 billion a month buying bonds to keep interest rates low. Fed officials are expected to keep rates near zero at the two-day meeting ending today, but they are preparing to raise them at their mid-March meeting. The central bank is also poised to approve one final round of asset purchases and resume deliberations over reversing the pandemic-driven expansion of its securities portfolio. And resume deliberations over reversing the pandemic-driven expansion of its securities portfolio. So this thing moves really fast. Real estate moves much slower. So typically, if you'll study patterns and trends, you'll have time to get out of a declining market. Right? Mm-hmm. It's like the crash in 2008. When it crashed, it came fairly quickly. But we had a few months to get out. And we were really deep in East Austin. We were in East Austin before East Austin was cool. And we were buying lots for $20,000 a piece. We buy a house for $5,000, a farmhouse out in the country somewhere. Have it shipped on in the middle of the night, they would go get it, the house moving company. Come in, pour the pilings, put it on the house in the middle of the night. You go the next day, there's the house. It costs about $5,000 to do. So you buy a lot for 25 for the house, another 5 to move the house. Then we put 30, 40 in it. And then we sell them for 150 and up all day long, as fast as we could.
Wow.
Yeah. Then the market crashed. So we're sitting on a few. It's like, get out, get out, get out, get out. And the last one we sold, I'll never forget it. I actually wrote a check it. I wrote a check at closing for $900 to sell that house. And I couldn't wait to write that check. I'm like, 900, this goes away? Quick, close it. So I've been in these markets. And the thing about the stock market is I don't understand some of these companies. I don't understand crypto.
Yeah.
You know what I mean? I don't understand. If I don't understand, I'm reluctant to buy real estate. I understand. You know, I've been in over 800 real estate transactions. I've been doing this for 35 years. I've been through a lot, and you know, 2 recessions. And so when you have that experience, it gives you a degree of confidence. And so I'm not opposed to the stock market. I really am impressed with people who understand it and can do well at it. I think it's tricky. Yeah. And I like my real estate. It's nice and slow. I know how to attach value to an asset. We went over residential. We didn't cover commercial much. Yeah. But we'll do it in class. Maybe we'll do it next week. Do the preview before the class. Okay. So the class is in 2 parts. There's actually 2 courses. The first one is how to attach value to the asset. What is that property really worth? The second one is how to measure ROI and risk. And most people think that risk and reward are proportionate. I think we covered this last week. Mm-hmm. They think that in order to get a big reward, you have to take a big risk, and it's just not true. Because we get really big rewards with minimal risk. But you have to have a financial education to do that. You got to know what you're doing and how to do it. So that's it. How are we doing on time?
We are at 10 o'clock, so 10:01. Just these last few things.
I just want to say thank you for your time. Again, this is Wednesdays with Wayne. I'm Wayne. This is Mickey. And thank you for showing up. What am I reading?
Those are the last few things. We just want to go over the course. The class is on February 22nd. You can go to our website now and purchase it, or give us a call. And if you have any topics that you would like us to discuss on future Wednesdays with Waynes, please send us a message or post in our comments section.
Email us,
or email us at info@buildmyrebusiness.com.
Please.
And let's see, our next topic on February 2nd is going to be how to fix up an investment property when budgets matter. So our February 22nd course that goes over investing is 8 to 12, Investing 101, Does the Price I Pay for Property Really Matter? It's going to be a 4-hour course, live via Zoom, that Wayne is going to teach. And then 1 to 4 is going to be Investing 202, How to Measure ROI and Risk. That's a 3-hour class on the same day that Wayne's going to teach. And then your remaining hours are going to be done online. All right?
Thank you. Good job. Good job. Thank you.
You're welcome.
Much better than I could have. It takes a village. And once again, my saying, key to success is incompetence. You're only as good as your team, so thank you, Mickey. Appreciate you being here and helping me.
Thank you. Yeah.
Thank you very much for arranging this and helping me do it.
You're welcome.
Yeah, it was really well done.
you.
Thank you. So thank you very much for showing up. Thank you for being customers of the Real Estate Business School. If you haven't been, please consider it. And remember this, you're born a genius and meant to be incredible success. Let's go out and make it a better world. Now, go mind your own business. Thank you. See you next week. Thank you for doing that. That was good. Thanks. Hope they had a good time.
Me too. I'm to take it off of here. Close it.